There are two criteria that I primarily look at when I'm analyzing rental property investments. They are number one, the cap rate, and number two, the quality of the neighborhood. Let's talk about number one, the cap rate. The cap rate is expressed as a percentage. How much income does this property spit off relative to its total market asset value? So if we're talking about in simple numbers here, $100,000 property, after you pay all expenses, not including your debt, so not repaying the mortgage, not repaying the interest, all expenses, which would be repairs and maintenance, maybe property management fees, insurance, property taxes, all those types of things, how much income is left over and what percentage of the total asset value is that? So on our $100,000 property, if you collect, let's just say $1,000 a month in rent, okay, so that's $12,000 in total gross rents that are collected for the month. You pay $6,000 in expenses. You're left with $6,000 left over at the end of the year, which can go to cover your debt, or you can put that back in your pocket, right? That would have a 6% cap rate. So that's effectively telling you, how much income this asset's generating after expenses. That is the cap rate. And I think that is probably my number one number or factor that goes into any real estate rental investment that I would make. Number two is the quality of the neighborhood, right? So the quality of the neighborhood kind of impacts what kind of returns you're likely to get on the actual appreciation of the property. So remember, in real estate investing, you get returns in two ways. Number one is the income. Number two is the appreciation of the underlying property. Now, it is really, really difficult to forecast. I'm going to say it's impossible to forecast with any statistical accuracy. And I'm sure there's tons of data out there backing me up on this. There certainly is when it comes to the stock market. It is impossible to forecast with reliable accuracy, statistically significant accuracy is what I mean to say, the actual market price, like what's going to go up in value. But what you can do is use a qualitative metric of neighborhood quality, right? Neighborhoods that are higher in quality, that are maybe close to other things, low in crime, have good schools, these are going to hold their value and probably go up faster in value than low quality neighborhoods. So I want to see in my investments, I want to see high cap rates in high quality neighborhoods, right? Now, the other thing to consider with real estate is when we're looking at real estate investments, we typically always look locally, right? Like that's what we know. We kind of know the little area, like 1 hour around our bubble of where we live. It's like a real estate investing bubble, right? Like I travel 15 miles, around my house on a daily basis. 1 hour outside of that little 15-mile radius is about what I know. I kind of have an idea of what's happening in the market there, but I don't look anywhere else. And I think for a lot of real estate investors, that gives you a local bias or a localacy bias, right? Or I guess we could also say that prohibits diversification because we're concentrating in our local market, which we think we know better than anyone else. And I'm telling you that is statistically wrong, right? So how could we look up and find these opportunities with high cap rates and high good quality neighborhoods in other markets? That has historically been a challenge, but I did find a way of looking it up, which I'm going to share with you guys here. It's on Roofstock's website. Now, Roofstock, I'm not actively using Roofstock right now. I don't intend for this to be a promo or a review of Roofstock. I may do some deals using Roofstock. It certainly has caught my interest since I found it yesterday. But what I'm going to show you guys here is the search function. This had me really, really intrigued because I can easily search by these two criteria. So if we come down here to properties, right? And we go to more, we can search by cap rate. Now, you would obviously, before buying a property, want to do your own due diligence and make sure that the cap rate that they're presenting is accurate. Maybe they're, based on kind of their incentive and their business model, I'd assume that the cap rates are maybe a little high, maybe a little low. Who really knows, right? But, in general, if all of them are using the same kind of fundamentals to establish their cap rate on this site, it is an accurate basis for finding them on this site. But let's just say I want a 6% cap rate. That's going to be relatively high. So we're going to apply a 6% cap rate. And then our neighborhood rating here, we want to find neighborhoods that have a 4.5 or 5 star. So of all the properties on here, which let's just reset that. I want to see how many are on here. There are 979. But when we apply these filters to 4.5 or 5 star, and then a cap rate here at 6%, that takes us down to just 14 properties, right? So 14 properties that have that 4.5 or 5-star rating and a 6% or higher cap rate. So this kind of opens our eyes to alternative markets, or not alternative markets. That makes it kind of sound sketchy. But this opens our eyes to other markets we would have never thought of. Like this one here in Plumboro, Pennsylvania. I have no clue where that is. Never would have thought of that. Birmingham, Alabama. Cottonwood, Madison, Mississippi. Glenshaw, PA, Aero, Oklahoma, Conroe, Texas, Evans, Georgia, right? Notice you're not seeing any of these here in the real hot markets like Naples, Florida, Fort Myers, Florida, Orange County, California, right? In those types of places, those markets are really typically oversaturated, over competitive, because people are, just trying to actively buy places there and move there because, the property values have gone up so much recently in a short period of time, which may or may not be likely to continue. These ones here are finding, property values finding properties in overlooked markets, which I think is incredibly interesting. The only downfall of this that I see is that Roofstock itself, and this isn't really a downfall, but just kind of a limitation, Roofstock's portfolio is fairly limited. So we can't actually find, all opportunities. It would be cool if we could see this in some way. Maybe there is, but I don't know about it. See this in some way across the entire US and the entire MLS system. That would be really cool to see, a neighborhood rating and a cap rate on all of those real estate listings and search more. But this certainly gives you it shows you some good opportunities right here in front of you, but further, if you wanted to kind of go off of Roofstock, maybe you could go start looking around where this thing is located and find some neighboring properties that are listed for sale and subsequently make investments like that. So those are my two criteria for finding solid real estate rental investment opportunities and, kind of quick and easy way to find them and find them nationally. What do you guys think? Let me know in the comments below.